What's up, everyone? It's Kadi with Money Investing. Welcome on board for another Market Open live stream here. We do have another, possibly a red open. We've got the QQQ ETF down another 45 basis points. The SPY here down another 40 basis points. And the Dow Jones also down close to 40 basis points here pre-market on the day. Volatility is higher. Oil prices are down. Yields are down a little bit. And crypto prices are just flatlined once again. So hope you guys are having a fantastic start to your week. Just let me know in the live chat if everything is working well. I just want to make sure that the audio and the video is working well without any technical issues. And then we'll take a look at some individual companies. We'll go over the earnings calendar because this is a very, very exciting week. We've got a lot of earnings coming up, including the FANG stocks, including big tech. Coca-Cola reported some very good numbers. It's a little bit higher, 1.5% pre-market. But let me know in the live chat if you guys can see me and hear me, because I don't see anybody typing anything right now. Okay, so Nick, finally somebody showed up in the live chat. But anyway, so this is going to be the earnings calendar. Obviously, we've got Microsoft, Alphabet tomorrow, along with Visa after the bell. This morning, pre-market, we have Coca-Cola, which already reported. I'm not sure how Activision Blizzard is doing right now. So ATVI, it is, let's take a look. Slightly down about 0.5%, so not a big move. Obviously, there's a bid for Microsoft to buy this thing, so it has been kind of flatlined. It's been trading at around $78, $80 a share. But Microsoft and Alphabet and Visa tomorrow after the bell, along with Enphase Energy, Chipotle, and then of course later this week we've got Meta Platforms, PayPal. Wednesday is gonna be like the doomsday, like the day of the reckoning. It's gonna be two of companies that basically collapsed in that last earnings call. 25+%, 30+%. They're both down 45, 50% from all-time highs. Both reporting on the same day. And of course, then we've got Apple and Amazon reporting on Thursday as well. So there's a lot to talk about moving forward. And then before we get into some of the earnings calls, and then before we go over some of the buy targets, upgrades, downgrades as well, just quickly going over oil. Chinese stocks crushed as lockdown in Shanghai persists. So oil prices saying 4.5% Monday, extending last week's decline as concern mounted over how prolonged the lockdowns in Shanghai and further increases to U.S. rates might hurt global growth and crude oil demand. And of course, a lot of Chinese stocks once again selling off because of the pandemic kind of resurfacing. We're seeing some of the cases go higher. And then not to mention further lockdowns for people in Shanghai. So Coca-Cola's profit beat leads to busiest week of earnings. So, they I think reported a very nice profit for their Gatorade and for other beverages segment. And they kind of reiterated their full year revenue and earnings guidance. And Twitter also jumping 5% on reports it's ready to accept Elon Musk's offer. I think they're still sort of revisiting this, and they're still kind of deciding, taking that into consideration. I think they are going to announce something today if they are ready to, in fact, confirm that they are going to be indeed accepting Elon Musk's offer of $40+ billion. So that should be interesting. And again, Twitter's up a little bit over 4.66%, so it's back over $51 a share. And this right here is going to be Coca-Cola. So Monday reported quarterly earnings and revenue that topped expectations as consumers drank more of its trademark soda, Powerade, and other beverages. And despite the suspension of its Russian business, the company reiterated its full year revenue and earnings outlook. And this week we've got over 660 companies on the S&P 500 reporting earnings, including of course the big tech. So going over some upgrades and downgrades, JP Morgan reiterates Apple as overweight. Mizuho reiterates Meta as buy. However, I did not like what they put out in terms of notes. So we recently did a round of checks on Facebook advertising trends. The key points, number one, is a seasonal decline in the first quarter of 2022 is about 20% steeper than normal due to the macro continued challenges in iOS privacy and Mac's shift to IG Reels. And from a vertical perspective, we saw weakness in retail, financials, and autos that contributed nearly 60% of spending for these ad agencies. So, expectations are really low for these companies, especially Meta Platforms, Google, PayPal going into earnings. Apple and Microsoft did a video today earlier, so make sure that you do check that out as well. So it should be very, very interesting. Wolf initiates Snowflake as a buy. We've got Raymond James upgrading AMD, Advanced Micro Devices, a strong buy from Outperform. As we've become more concerned about cycle risks given potential for slowing consumer demand and elevated inventory levels, they do like the attractive valuations that AMD is trading at, and it appears to be well positioned given the multiples right now. Stifel reiterates Amazon as a buy, and then Jefferies reiterates Salesforce as a buy as well. So obviously I did a video over the weekend. Nobody wants to be in tech right now. Everybody's just getting rid of tech because of all these fears with slowing down in growth, in revenue, earnings, and then we've got potential recession overhang, interest rate hikes. The wall of rage just goes up and up and up. And, people, investors in general, are just starting to get out of tech as quickly as possible, especially after Netflix's earnings that we had last week. So yeah, this should be very, very interesting. Volatility is, up close to 3%. It was much higher. It was up over 5-6%. So it was trading well past 30 levels. So right now it's starting to sell off a little bit, and we're seeing a bit of a recovery here pre-market on both the SPY and the QQQ. So, we'll see how the day is going to be. Right now, majority of people voting are expecting markets to be red, close to 60%, and only 30% are expecting the markets to be green, and 9% more or less flat. So the sentiment's very, very bearish once again for the markets. So, but once again, thank you so much for joining, everyone. I really appreciate it. That is the end of the presentation. That's pretty much everything that I wanted to go over. Obviously, the interest rates expectations are for us to see a 50 basis point hike in May, which is going to be in less than 2 weeks. So I think the first week of May is when we have the Fed meeting. May 4th, actually, is when we have the Fed meeting. So close to 99% probability that we're going to see a 50 basis point hike, all the way up to another 50 to 75 basis point hike. That's majority of investors kind of pricing in based on the Fed funds futures. And then 58% hike of 200 to 225 basis points, right? So that's going to be another 50 basis point hike from the Fed. So the expectations are pretty aggressive among investors when it comes to the monetary policy and interest rates. As I mentioned in the Discord, I put out a big long note in our Discord going over sort of like all of my thoughts and my process and kind of like what I'm thinking in the markets right now. And one of the things was inflation and how that is going to be the key leading indicator for everything that happens moving forward, right? Whether it's interest rates, whether it's recession fears, whether it's the bond yields, whether it's the stocks performances, inflation is what's really going to matter over the next few quarters. So, Rosny, no, I still have Pinterest. I actually did a portfolio update video not too long ago. I did a performance update as well, going over my 1 year returns over the last year, coming from April till March. So that video is for members only. It's a private Patreon video, so you're more than welcome to watch that. And it goes over the 30 stocks that I currently own right now. So you should see Pinterest as part of that as well. So it goes over every single stock and my percentage allocation. So make sure that you do check out that video as it goes over every single stock that I have. And of course, my biggest holdings all the way down to my smallest holdings. So should be an insightful video, give you guys a little bit of a context on which stocks I've obviously trimmed over the last year. Obviously I've trimmed AMD, Upstart, Vertex significantly as they've run up, and now I've reallocated back into some of the names that I've obviously been selling off. So it's been a little bit of shift. Still overweight tech, but I've also got like a small dividend portfolio that I'm building right now. So all of that is in that video. So will Tesla fall today? Let's take a quick look on Tesla. We got about 4 minutes left for the markets to open. So our focus is going to be on the broader markets, obviously with the volatility and everything. So, but looking at Tesla, we're coming down to $980. There's very few companies that right now are still trading above their moving averages, right? So if I go over, give me 1 second. So S&P 500 top weightings. All right. So 1 second. Let me just see if I can find it. All right, right here. So this was, this is one of the things that I was going over earlier. This is the components of the S&P 500, right? This is what makes up the S&P 500. These are the top 10 stocks, right? So top 10, obviously you've got Apple at the very top. It's 6.9% weight. Market cap's well over $2.5 trillion, followed by Microsoft, 5.6% of the S&P 500, Amazon, Tesla, Google, Berkshire Hathaway, United Health Group, Nvidia, and Johnson & Johnson, right? These are the top 10 S&P 500 companies, which I think make up over 15 to 20% of the S&P 500. I think it's over 20%. So 12 plus 3.5 puts us over 15.5, 17.5, and then all these 1%. I think it's over 20%. So a fifth of the S&P 500 makes up of these 10 stocks. And out of these 10 names, only Apple and Tesla and I think Berkshire Hathaway are the 3 companies, might even be United Health. Let me just take a look. UNH. So yep, United is one, and then Johnson & Johnson is going to be another one. So yeah, those are the only 4 companies that are trading above their 200 and 300 simple moving average, right? When you look at Nvidia, when you look at Microsoft, when you look at Google, when you look at Amazon, all those companies are trading below their moving averages, right? So it is a very bearish environment for stocks. Going back to Tesla, it's one of the reasons why the markets are holding up. If Tesla were below their moving average, if Apple was below their moving averages, then we would be in a very severe bear market for the NASDAQ, right? So NASDAQ is still down 19-20% from its all-time highs. But if Apple and Tesla were lower and we were trading below those moving averages, then NASDAQ easily would have been down like 25-28+% from its all-time highs. So I think this is a very strong area of demand for Tesla. I think it's going to hold up at these levels at 950, 995. I mean, stellar earnings. I did a video earlier going over their earnings, kind of recapping everything that they reported. It was fantastic. I mean, margin growth, revenue growth, deliveries growth, earnings growth, you name it. Everything was just picture perfect. But yet the market environment we're in is just not, sustainably rallying, or any type of gains are just getting lost, with this market sentiment. So, so my mic decides. There's been obviously a lot of coincidence that as soon as I got this mic, the markets have just been selling off. Literally, when I got the mic, the markets were around here, right? The NASDAQ was literally at 14,500, right? And as soon as I got the red mic, we're down 12%. But again, it's just a coincidence. What I can do is actually I can get a cover for the microphone, which is like a green cover, like those fluffy things that I can just put on top. That's something that we can look into, right? That's something that maybe I will consider and see if that actually does anything, but I doubt it. Obviously, it's a coincidence, but yeah, if this microphone is indeed the reason the markets are selling off, then it's a good thing because we're getting some good deals for a lot of stocks out there. So Jealous, what do you think about InMode in this environment? No more allocation. So InMode is part of my portfolio right now. I've got, I think, 1.5, close to 2% allocation. Obviously, it's been selling off 2 stocks that I do think that markets are really overlooking right now. InMode is one of them, and then TrueLeave is another, which obviously has been selling off. By the way, I was listening in on one of the podcasts from the CEO of Roundhill ETFs. So Roundhill obviously is a very known brand when it comes to ETFs, and they created a new ETF called WEED, right? So it's called WEED, and this actually went live on 420, right? So this is an ETF that actually went live. Very, very low volumes. Obviously, there's not a lot of investors looking at this thing. But if you take a look at the top 10 holdings, TrueLeave is about 8% of this ETF. And I do strongly believe that TrueLeave is one of those companies that right now it's just getting overlooked because there's just no institutions interested in these names, right? OTC stock, there's not going to be a lot of whales interested in these companies. So that's one of the reasons why it's not getting any bids. And that's why obviously it's been on a consistent downtrend. InMode, very similar pattern to Zoom or to Upstart or something like that. Very strong growth rates. It rallied all the way up. And then now the growth rates are starting to kind of decelerate, or the company is guiding for, slower growth. We're seeing a strong pullback here for this company. But both of those long term, I have no problem kind of adding more in dollar cost averaging because I do think that they're trading at very, very cheap valuations right now. So looking at different stocks here, so PayPal down about 1%, AMD's up 3%, not bad. So pushing right back higher. We got Nvidia down about 1%. AMD, by the way, got an upgrade today. A strong buy rating from one of the firms, so that could be one of the reasons why it's definitely pushing higher quite a bit. But Google here, more or less flat. Netflix down another 30 basis points. Amazon and then Meta Platforms, Facebook's only down about 0.5%, with Tesla down 2% at the moment. So yes, AMD got an upgrade. Where is the money flowing to? That is the big question. That is definitely the big question because obviously nobody wants to be in tech. That's understandable, but it's not like other sectors are doing well or have done well, right? So over the last couple of days, we've definitely seen almost all 11 sectors, all stocks, even banks, Chinese stocks. You look at Dow 30, every single thing was red. Even today, I mean, you look at ExxonMobil, Chevron down 4 and 5%, which, by the way, I do think is more than justified. I think these companies have run up quite a bit with energy prices falling, with oil down close to 5.5%. We got Brent and crude both down 5% today. We're seeing a pretty big sell-off in energy stocks. By the way, both of these companies report at the end of this week, Friday before the bell. You hear from Chevron and Exxon. So it's just my speculation would be that money is really flowing into cash, even though inflation's at 8.5%. But I think Wall Street is just kind of parking money on the sidelines in money market accounts as this volatility kind of weathers off. And as we get some more updates on inflation, on interest rates, we've got the Fed meeting coming up, earnings are coming up. So obviously nobody wants to be on the front end of receiving this type of volatility when there's so much uncertainty with earnings and everything else. So I think that's been the narrative with equities in general. Even bonds have underperformed. Bonds are not doing well. So bonds and stocks both are down. Crypto for the year, Bitcoin's down 14%. Ethereum's also down, I think, double digits. So Ethereum is down 22% actually, much more than Bitcoin. So, and then gold and silver is also like more or less flat. I think it's only up like 6 or 7%. So, there's been a lot of exodus, I think, from equities, stocks, commodities, cryptos, bonds, everything. I think it's more like, this is just a lot of uncertainty, and you're just better off kind of staying on the sidelines. That's at least how hedge funds see it, or big money or like whales are kind of doing it right now. His volumes have been lower. All right, yes. So Moss, thank you so much for that donation. I really appreciate it. So let's take a look at Hood and NIO. So Robinhood, as I've mentioned before, I've never been interested in Robinhood. I do think there's a lot of uncertainty with their business model in general. I feel like there's a very strong support here at $9.93, close to $10 range. We've got a couple bounces here for Robinhood at those levels. So very, very strong bounce here on February 25th. Very nice bounce here on January 28th. And then now it's approaching that level again, with the RSI continues to make that bullish divergence. So from a technical standpoint, I think it's a great setup for an opportunity to see like a 30-40% move to the upside, as what we have seen before. But fundamentally, I can't speak much because, for one, I haven't done a deep dive on Robinhood, and valuation-wise, it's trading at 5 times earnings. It's not a profitable company, I think. So there's not a lot that I can add on the fundamental side, but technically, I think it's setting up for a reasonable trade idea where you've got a stop under 10, and then a possible bounce off of that, $10 range, possibly even $9.95 on earnings. So earnings are coming up for the company as well. When it comes to NIO, obviously with those Chinese stocks, all of them are down. It's not a surprise. I mean, you take a look at the entire watch list. I mean, Alibaba's down 4%, XPeng's down 3.7%, NIO's down 4.7%, Li Auto's down 4.7%. JD.com's more or less flat today, but almost all Chinese stocks are selling off. And there's a support here at 1650, 1635 around these levels. So we'll see if NIO actually closes above that level or if we continue to kind of break down even further. So, we had a nice breakout happening, but then the entire market faded and then rolled over. The NASDAQ obviously started selling off 12-15%. And as a result, NIO's been selling off. Alibaba is now under $90 again. In fact, just over $83. So, just when NIO started selling off, Alibaba also started selling off, and they're both down 30-31%. So, very much correlated with each other at the moment. All right, let's take a look. So the money might be going to TLT. So TLT right now, I added or started a new position this AM because I do think the bond yields are obviously pushing higher. They have been pushing higher, right? So the yields are, where are they? The 10-year yields are 2.8%. So they have definitely been pushing higher, but I do think that there's going to be some stabilization. Long term, I do think that yields are going to come right back down. In the short term, sure, they can go up to 3%, over 3% is a possibility for the 10-year yields as the balance sheet runoff happens, as the Fed starts to kind of dump some of those assets, mortgage-backed securities and treasury yields, it's going to put pressure on the market, which is going to bring prices down and yields higher. So that definitely is a possibility that yields go past 3% for the 10-year. That's why I've started a very small position in TLT, because it moves inversely to the bond yields, right? So TLT is up 1.33%, back over 121 now. So very small position, and I'm more inclined to kind of adding more below 115, 110, around those levels. It's got a very nice dividend, decent dividend of 1.89%. So this is going to be a part of that dividend portfolio. So, all right, let's take a look at individual companies, see how they're doing. Wow, so they're not even on. Okay, so Amazon's flat, Netflix is flat, Meta Platforms up close to 1%, Tesla kind of recovering back over 990, AMD's up 3.5%, PayPal's up close to 0.5%. So we're seeing some buyers step in, but again, this could just be retail volume, as you know, nothing's really changed over the weekend that would force big money or the whales to kind of jump in, other than a big valuation reset. So Nvidia 195. I might start a position in Nvidia, very, very small position, because I really want to get a little skin in the game. Sub 200 was really the level that I was watching for a long time. I'm not still fully convinced that it is fairly priced. I do still think that the valuation is rich. It could certainly come down further, obviously depending on how the NASDAQ and the S&P perform. But I don't mind at least getting started sub 200 for Nvidia. So be on the lookout if you're a part of our Discord. That's something that I'll be looking for. So Toronto Div says inflation about to come in a bit soft. That's my bet for either May or June. So that is the expectation, right? That is something that we are definitely expecting. Lots of investors, economists, they expect inflation might have peaked in March, the reading that we just got. And if that's the case, then I was talking about this with one of our members also. Like, if inflation disappoints on the downside over the next 8 months, and the Fed pivots from being hawkish to more dovish, and they're like, okay, inflation, supply chain issues are abating, oil prices are coming down, inflation on its own is starting to stabilize as demand kind of catches up to supply, and inflation starts to roll over, and the Fed is like, okay, we're not going to do 9 or 12 or 15 rate hikes as what the market was pricing in. Maybe we'll do like 6 or 4 or 5 or whatever. That will be a huge catalyst, in my opinion. That'll just be like a big bullish signal for the markets if there's any change or pivot in Fed's positioning of monetary policy. Because think about it, right? Right now, the market's already priced in the worst case scenario, which is like a lot of rate hikes. Inflation is going to continue to accelerate, and the Fed needs to do everything they can to destruct that demand. They need to destroy demand, literally. And that destruction in demand is going to be across the board. It's not like just for specific items. It's going to be for everything. That's why, companies are also hurting, because the expectation, at least in the near term, is that revenues are going to go down, profits are going to go down, they're going to slow down in growth. So I think the biggest bullish signal for the markets really can be inflation coming down on its own. That is probably the one and most bullish signal for the markets. If that worry goes away, I think we are in the clear. But as long as that's an overhang, as long as that's an uncertainty in the markets, I think we're going to see a lot of choppiness. We're going to see a lot of back and forth. Some sectors might do well, some may underperform, some may outperform. I think staples can continue to do well, because that's still going to be that possibility of recession if inflation doesn't come down. I think that's the one single most thing to watch. So Bhavani says, just raise rates 5% in May and get it over with. Man, that would just throw off all the valuations out the window. If you've got the risk-free rate, which is the, obviously interest rates at 5%, that would be crazy. That would be like literally crazy. So Musk buy Twitter, $43 billion done deal. So that's great. Let's take a look at Twitter and how the stock's doing. Obviously this was more, it was when the media came out with that catalyst, it was kind of put together as it was like ready to accept Elon Musk's offer. So I'm assuming they have already or somewhat made that decision. But Twitter's up over 3.6%. Market cap sitting at just under $41 billion, so a little bit over 40.5 billion. So obviously Twitter has been one of the stocks that's been performing well over the last few weeks. Year to date, Twitter's up 17%. Crazy. And yeah, that should be incredible. $55 is going to be that next resistance. So Coinbase, let's take a look. Trading at 134 now, up 2.3%, but obviously been selling off quite a bit. There's still a bullish divergence in play. So still we're not, obviously not getting down to as low as 18 or 19 RSI reading. Still at over 33, with the price obviously making lower lows. I already do have a position in Coinbase, although it's a very small position, but my plan would be to kind of adding more. There's just a lot of stocks, there's just so many companies that are trading at such attractive levels that you just got to pick and choose. You got to be very selective with companies that you believe are going to have the most upside. Even though in this market right now, I can count how many stocks I want to buy, but at the same time, it's just, you got to be selective with your buying. So PayPal, 67 basis points, Google up, Netflix still selling off. Netflix is actually becoming very attractive. I'm not going to lie. Sub 200, I would seriously be considering it. How many people here own Netflix? I just want to know. Either you bought recently or you had it earlier. So let me know in the live chat. So yeah, AMD definitely. That's we've been buying it sub 90, sub $100, and that's something that I also want to dollar cost average into. So obviously a great company. I've had AMD for a long time. So Bobby says me. I gotta say, sub 200, that would be very, very interesting. So Dave says, yeah, rate hikes are super sensitive. In the 80s, rates started around 6-7%, so moving there to 12% was a 100% increase. This time, we're going to be there in no time. Yeah, the reason why they've become so sensitive is because of the debt. In the 1980s, the debt was nowhere near close to where we are right now, right? I think it was barely $1 trillion back in the 1980s. So you go back 40 years, the debt was far, far lower. We've increased 20 times in the last 40 years. So GDP has not grown that fast for the US, but the debt has. So that's why any increase in interest rates results in a much higher interest payment, which the Fed doesn't want, which the central bank obviously doesn't want. So yeah, long term, there is going to be some implications. That's what Ray Dalio has also talked about time and time again, but it's kind of like one of those black swan events that you don't quite price in for, but in the back of your head, there's going to be a day where things could be worrisome. But, all right, so Ash says sold at 600. This is a great movie, obviously, saved yourself. But says I own Netflix for 3 years. Netflix since it was like $7. Wow, that's a great price. No Netflix position. Nasdaq taking dive. Yep, so Nasdaq might be more or less flat here. So there we go. We're down close to 1% here. And S&P is down 1%. The Dow is down 80 basis points. Volatility here back almost over 30 levels again. Oh, I meant $7 subscription. Okay, I was gonna say man, you've been in Netflix for that long? That's crazy. Yes, Ray Dalio does say that cash is trash, which I do agree with. I think unless you've got a use for that cash, in the near term or the next 6 to 12 months, obviously there's no point holding on to any uninvested cash that you have, right? What's up with Apple? So Apple reports later this week, along with Amazon. And Apple here, wow, under 160 now, just down about 1.5%, just at that 200 SMA. So, look at this. 159.07 was a low for the day. 200 SMA is sitting at 159.04. Apple and Tesla are the ones holding up right now. Everything else, is down significantly. Even Nvidia, wow, 191, down close to 2%. Whew. AMD giving up on some of those gains. PayPal giving up on some of those gains. Netflix also. Amazon also. down 1.2%. Meta Platforms just turned negative. Tesla's just holding up to at 980 right now. Yeah, I mean, this market can be like very, very emotionally challenging because you've got so much choppiness, right? You've got so much back and forth in this market. Volatility, obviously. And, we've talked about this before. This was a big drop here, 49-50%. And right now we're on our way back over to 35-38. This is, as I said in my Friday's market update, another one of those days that we had on Friday, another 20% move on the VIX. And we are there. We are there at 35-38. And this is where I would seriously, again, position myself as a buyer. And we can start going on shopping again, right? This is at VIX at 35, 38, 40 plus levels. So again, we've always been cautious here and we've always been aggressive here, right? So that's a very, very simple sort of leading indicator for us. So yes, NIO has also mentioned that they are going to have a net profit after 2023. So that's something that we are obviously looking forward to. Margins have been going up. Deliveries have been kind of back and forth, obviously for different reasons. But revenue's been on a consistent growth. They reported nice 95, 100% growth year over year. Earnings obviously are still negative, but they are going to turn the corner at some point and become profitable at the end of 2023, starting 2024. So that's something obviously to look forward to. Volatility is back over to 30 now. So big move here in the VIX. And NVIDIA, what is our analysis? So we're definitely breaking down below 195. I keep a close eye around here at 178 would be that next support level. One of the things that I mentioned in our Friday's update is nothing really matters right now, right? So you can't pinpoint and make a case that, oh, this stock is trading at such cheap valuations, or, oh, this stock is trading at a support, because for right now, for the markets, that doesn't matter. It doesn't, because all that matters right now is sentiment, right? People's perception of these companies in the near term, in the near future. And if that is not good, if that is not a positive thing, then you are going to see days like, Friday, days like today, where stocks are just straight up down. And TradingView is just so bearish right now that it's also turned my tickers red. Like, all these tickers have turned red. And they don't even want me to see the quotes. So it's not even showing me how much changes we have, because I might freak out. It's like protecting me from seeing the quotes right now. Wow, so Upstart is up. It's up close to 4%. Not a bad day for Upstart when the entire market's selling off. We got Square higher, AMD, CrowdStrike. So it's not like every stock is selling off. There's still quite a few stocks that are pushing higher. So is the market actually bad this year, or was the market of the last 2 years just unrealistic and highly overvalued? It seems like things are just compressing back to normal values. I think that's a great question. I will say that over the last couple of years, the expectation from investors definitely got ahead of itself, right? So, the S&P 500, I think the last 5 years, or might be just last 3 years. I think the last 3 years, it's compounded an average return of about 20%, 20 plus percent, right? I think last year S&P was up 27%. I think the year before that, I think it was up double digits as well. So I do think that the expectations have obviously gone up. But what I will say is that the market and individual stocks, it is very unlikely and a very rare situation for companies to be trading at their true fair value, at their true intrinsic value, right? So to give you an example, if AMD is, just an example, if it's worth, let's say, $75, right? That's the intrinsic value for that stock today. It is very rare that it's going to be trading at that level. It's either going to be overvalued or undervalued. It's going to be either trading at a very, very high level, or it's going to be trading at a very low level, right? So the markets are just this pendulum that swings based on sentiment, right? If it can become overvalued on the upside, it can definitely become undervalued on the downside. So And if you look at a lot of these companies, their businesses have grown, right? So I was talking about this in our other videos. If you look at PayPal, right? If a company like PayPal, it is literally back to its March 2020 low. Think about that for a second. It is down to that same price it was trading at 2 years ago in the middle of this entire pandemic, right? When the stocks were selling off. It was at $86 a share. Right now it's at 87, right? Last week, I think it closed at $86. So in 2 years, the stock price has done nothing. Right? It went up and then right back down. But what's the business done, right? What's the actual fundamentals that have done for PayPal over the last 2 years? They've had the most growth in subscribers. They gained 75 million users in 2020, 45 million users in 2021. They're guiding for another 20 million users this year. Revenues jumped to over 25 billion. Free cash flow was over 5 billion. So the point is the business grew during the last 2 years. Stock price is back down to those levels. So, the market is obviously this big. It just keeps swinging back and forth wherever the sentiment goes in the short term, right? So obviously that's why it's so important to keep your eyes on the price, which is the fundamentals, which is the business itself and how that's doing, as opposed to stock price, because stock prices changes every day. Why would the company's valuation change every day? It's all sentiment, right? So that's my 2 cents there. So Nick, Caddy, what would be the implication on Tesla as Musk is making this Twitter deal and a substantial percentage of his Tesla stocks will be part of the collateral? So I do think that it's not going to have that much of an impact on Tesla's stock per se. It's going to have more of an impact on him personally, right? So either way, I mean, if Tesla's collateral, then somebody's going to own it, right? At the end of the day, right? If it's collateral, he's putting up that collateral to get that financing. By the way, I still got to go over and, look at the financing and how he's actually secured that financing and everything and what he's actually putting up. But at the end of the day, if he's putting up Tesla stock as collateral, somebody's still going to own it, right? So, but yes, of course, if Tesla stock drops quite a bit and starts to sell off, then that could be an issue for Elon Musk and for the bank that's financing it. So there's a lot of ways to look at it. I think at least right now, I don't think that's going to be an issue. But if Tesla's dropped substantially, then that could be a potential issue for Elon. Anand, hey Caddy, just wanted to say hello. How are you, red or green? So doing much better. Doing a lot better. Obviously, with the illness that I had the last couple of weeks have been brutal, not just for the markets, but for me personally as well. But yeah, just recovering well. Markets, as I've already said, in the short term, there's going to be a lot of weakness. I think there's a lot of red that we're seeing on our screens. I mean, look at Dow 30, everything is down. Nothing really is pushing up. Just Coca-Cola on earnings is up a small 1% move. Everything else is down. You look at banks, let's see how they're doing. All banks are down also. So, only PayPal and Square are somewhat up. So fintechs slightly pushing higher, but all banks selling off. We got some ARK ETFs here. They're doing well. They're doing much better than the markets right now. And if you take a look at some recovery plays, everything down, airlines, cruise lines. So let's see what the heat map looks like. So this is the heat map right now. Obviously we've got the energy sector down the most. It's the most red on the day. Financials are not too hot either. They're also selling off. With cyclicals down, Amazon, Tesla, Alibaba, they're all selling off. Industrials, real estate, utilities, materials, commodities, insurance, tech, consumer electronics. Software is doing a little bit better. So you do have, companies like Zscaler, Square, Cloudflare, Palo Alto Networks, Fortinet, some of those doing much better. Cybersecurity is doing much better in software. So kind of a weird day. I mean, you've got software and technology, a little bit of technology that's doing better, and then everything else is just straight up down. And fintech as well. Upstart's up 6%. Wow, that's incredible. Incredible move to the upside. Actually, it's up close to 4%. So I'm very tempted with buying this stock also. Very, very tempted. I think the valuation's definitely reasonable. Again, trailing basis 53. I think forward basis is much lower for the company. Do you want me to ship me a green mic? I think I like the red mic. I think it's good. I think it's keeps us on our edge of our seat. And it's a good meme for this channel. I think it's just nice with the red mic. I think a year from now we're gonna look back and be like, we'll bring the red mic again. Because if I'm thinking about putting that green thing to kind of, that, what is it called? Like something that you put on top of the mic, which is like very soft. I forgot what it's called, but maybe I'll find like a green one of those to put it on. So Facebook beats Q1 earnings. Oof. That could be tough, but it is possible. Let's see where it's at. 183, so slightly down on the day. There has to be some valuation support, absolutely, for this company, for both PayPal, Facebook, even for Netflix, because it's all about the market multiples that are just getting compressed. Dye your hair green. No, I don't think I want to do that. Maybe something else. Maybe something else green that I can put. I do have the light that can turn green, right? So if I change this mode, right now it's in blue. I don't know if you guys can see that. There we go. There's the green light. All right, quick market take here. S&P is down 1.2. Nasdaq's down 74. Dow Jones down 1.16. Volatility is still over 30, up over 7% on the day. Oil prices still dropping. Ethereum and Bitcoin is also pulling back aggressively, with the yields pulling back also down to 2.77%. 3 teens that big support on the QQQs. All right, guys, so that is going to be it from me. Thank you so much for joining. Eat a green apple. Maybe I'll do that next time, next live stream. Maybe I'll eat like a green apple. Yeah, Ken says, think Facebook and PayPal will get wrecked again, to be honest. It's a possibility, and it is possible. But then again, where's the bottom? Where's the valuation support? I mean, you can't expect these companies to keep selling off on incredible balance sheets and good revenue growth prospects and everything that they're doing for growth. So we'll be on watch for a lot of these companies. And again, lots of earnings coming up. So if you look at the calendar, a lot of interesting stocks reporting, starting with tomorrow after the bell. Before the bell, we do have 3M, one of my dividend stocks, reporting. And then we also have Waste Management. JetBlue is going to give us some more guidance ahead for Southwest, PepsiCo, and then UPS also reporting. And then, of course, Microsoft Alphabet later after the bell. So thank you so much for joining, everyone. I really appreciate it. The market's obviously selling off. What's new? Nothing really. We've got all Dow 30 stocks also down, except for Coca-Cola on decent earnings and Johnson & Johnson, but the Dow is also hurting. We got the S&P down 1.3%, Dow's down 1.27%, and the Nasdaq's down lower than the S&P or the Dow, but still down about 85 basis points. So Thank you so much for joining. I really appreciate it. I hope you guys make sure to drop a like and of course subscribe if you're new to the channel. We talk a lot about fundamental analysis, technical analysis, macroeconomics as well, summaries, different stocks to look at, all that stuff. If you're interested, there's also a link down in the description for the Patreon and our Discord if you want to join our money investing community. So thank you so much for joining. I really appreciate it. Hope you guys have a great Monday morning, and we'll be back first thing tomorrow morning.